Good afternoon. Afternoon, YouTube. Hope everybody's well. And trading okay? Hopefully trading a little bit better than me. Or having more, excuse me. Just making sure I'm coming through okay. Getting a bit more, sorry, I ran downstairs to get some water. And I must need to go to the gym, bloody hell. I'm actually out of breath. I don't know whether it's the COVID jab or something, but I literally sprinted down to start for one, and now I'm out of breath. It's terrible. Need to get to the gym. So, let's talk markets, shall we? And actually, I'm going to take a trade. So before I get into any of this, into the markets or whatever, I'm actually going to take a trade live here. Not a market order, but a breakout. On account of this Cad Swiss. So Cad's obviously been very strong recently. Strongest on the basket actually. We've come from this big uptrend. Had a nice corrective here, A, B. You could call it, I wouldn't really call it an A, B, shallow C actually, but you're probably looking at this as the corrective from this move, and now we're pushing on. So we created B wave. I'm calling it B wave because it technically is. And we had a good bullish engulfing candle yesterday. That's come after this hammer. By the way, if you've got any questions, anything you want me to look at, put it in the chat. Also, if you've got anything that you're struggling with in trading, then also, you know, I want to hopefully build a little community here where people are helping each other out, and you know, not just talking about this kind of stuff, the strategy, but also psychology, because you know, don't just focus on that 30%, which is strategy, which can be taught. You'll probably learn how I trade, you know, over a few weeks. But the psychology-wise is the difficult part. So if there's anything you want me to look at, or anything you're struggling with, I've probably been through it, trust me. And let me know, I'll hopefully help you out. Anyway, Cad Swiss. So we had this nice bullish engulfer here on Cad Swiss. So that context for me, you know, we can look at this push as a corrective here, breaking out. And actually these correctives, now there was a study done. This is quite, I think it's interesting. You might think it's interesting. There was a study done on chart patterns. So basic chart patterns. You've got your channels, you've got your wedges, flags, etc. Or whatever you want to call them, P pattern. And somebody took these patterns every single time they came, right? So every single time they saw a chart pattern, they took it, and they ended up not profitable. And I agree with that. Well, I mean, it was done. It was a verified kind of test. The thing I like about chart patterns, and the thing that's important about these chart patterns, is where they come in the chart. So the context of that pattern. So for example, if you've got a massive push, right, and you've got a tiny little channel here, let's call it a channel. You know, I'm never going to take that. I don't really trade chart patterns anyway. I use them as context to my trading and to add confluence. But I'm not going to take that long when the move there is already done. So it's important with these chart patterns is to recognize where they are coming in terms of the context and the market structure. All right, so this, from this move up, if we want to call this a corrective, you could look at it as a slight wedge. You know, a wedge being kind of like this, falling. Well, it's not really good drawing, but theory dictates it rises, and then you've got your channels, which is simply like this. You got your P patterns, which is kind of like this, or you can call it a flag, whatever you want to call it. However, the context of this is it's a nice digestion from this push up, and out once charts break out of these patterns. I like to see a bit of consolidation like this before just rising up. So if you've got a breakout, let's say from this descending trend line, I don't mind this, and I actually think these are more powerful when you get price action like that. So this is what we're potentially getting here. A kind of breakout, little reload, and then the bullish and the buyers kind of coming in, buying pressure coming in. We've crossed over that 20 on the daily, and the context or the setup has come on this 4-hour chart. V reversal, followed by another V reversal, and then we've got our wedging structure in here. Now I was waiting. Ryan, would this strategy be equally usable as a day trading strategy on 30 or 1 hour? In terms of the breakout, I've tested this on the smaller time frame charts, and I've found it's not as profitable, purely because, you know, obviously the higher time frames you go, the more powerful these signals are, more powerful the candles are, because there's simply more hours of price action within them, right? So I've tested through, you know, months and months of back testing on the smaller time frame. So that's why I don't use the 15-minute on my breakout retest, because I find it didn't work as well. I think the lower time frames, and again, this is my opinion. This is my personal opinion for how I trade. If I'm trading a breakout, let's say, for example, Euro JPY it was a decent example a few days ago. And I know market conditions aren't great. But if you'd got something like this on the 4-hour chart, it's more likely to take off, in my opinion, than on the 30-minute when you know you're susceptible to a lot of these fake outs. Look, here you've got another one here again, completely faked out. And so I think, and personally, trading breakouts, unless you've back tested and got your strategy that works, I think it's better done on the 4-hour and daily, and I think you win more. Which, you know, you might once you hit those decent breakouts on the smaller time frame charts, you could make more money, right, in terms of your risk reward, because you might only have a 15 pip or 30 pip stop, maybe less than that, right? So the winners will make up for the losers. For me personally, and you got to think psychology wise, are you okay with losing more trades? So I'm not. You know, my psychology, I don't like losing more trades. I'd rather have a bigger stop and win more trades, although I'm not making more money, than maybe lose 4 and then have one big winner. Because during those 4 losing trades, it's like, oh shit, I've lost, you know, 3 trades. When's this drawdown going to happen? So if your strategy, Paul, can handle that, and your psychology can handle that, then, you know, that's okay. I get it. And they are, I mean, the answers to your questions, they actually are viable. These kind of V reversals, reloads, they do work. I just found that I prefer to do it on the higher time frames and not be susceptible to as many losing trades. So this CAD Swiss is a nice setup here. V reversal, another V reversal, and we've got this wedge in, and this see, this 20 is now rising up in that kind of rising pressure into this area. Now, this hammer kind of made my decision for me, right? Let me see if I can zoom in so it's easier to see. Yeah, so this, it's not really a technically hammer, but it shows rejection of this area, right? Now, the difference between a hammer coming and the market falling, right, and a hammer coming and the market ranging, is that I consider after the market, now this could come down, right? That's fine. If I'm going to put my buy stop in here. So if it does, then, you know, I'm not going to be in. However, if we get this scenario and the market does break through this wick, that for me is a good indication that it wants to come up. And this bar here is simply a reaction again at that area, which potentially is sellers, support and resistance sellers coming in. But the sellers aren't taking control if it doesn't move down. You know, we don't know what's going to happen in the future. I'm just, you know, putting it for your information. So we don't know whether the sellers are going to take control. And if this does break through, I would really like that. So what I'm going to do here is I'm going to place a buy stop in CAD Swiss. And the only thing I don't like about it is my stop has to be down here, because that's the latest swing. So with my stops, it's always the latest swing. And nothing here, although I would understand having a stop here, I can't put it in there because my plan, my entry checklist doesn't allow me to. Because number one, there's no anchors there. Remember I talked about anchors yesterday? So this bar, you know, we've got a lower bar here, so there's not 2 bars there. Even with this bar here, I'll move my thing here. You know, this is lower than here, so we don't have an anchor there to put on. Now, if we put our buy stop in here, stop down here, but we get this again, I'll take this trade out, right? And I'll move my stop up, so that risk reward's a bit tighter. Not that that's a bad thing on a 4-hour chart, but you don't have to go as far for you to take your TP1. So I'll go through how I do it actually on this account. So I go to Google. And you may know this may be basic for people that are watching, but you may not know it. And I type in position size calculator. And I always use this MyFX book one. And I didn't know about this before. I used to try to work out manually, and I realized I was being silly. So with here, we go to CAD Swiss. So we go to CAD Swiss. Account currency, USD. Mine's in USD, depending on what your account currency is in. Account size. So I take it as the balance. So right now the balance on this account, this 200K funded is, if you can see that, 201987. So I would call that 202. So I'll put 202,000, 202,000. Risk ratio is 2% for my challenges. And the stop loss, we come in here, we take our crosshair, breakout zone. I'm considering this area, right, just above this wick here. I'm not as worried about this fake out. This area, drag it down to 50 pips, right? Put our 50 pips in, press calculate, and it does everything for us. So on this trade, I'm placing $4,040. You don't need to know about this, units, doesn't make any difference. But this is your main number here, lots, 7.27, right? So as I said, or whether you don't know or if you're new, I place 2 trades on. So I do 7.27 divided by 2 is 3.63. Take my little drop down menu here, put 3.63, right click, trading, buy stop, and do it twice. Trading, buy stop, do it twice. There we go. So that order is now in for me. My stop loss just underneath this candle, which is 0.74211. So I go up here. And again, this might be basic for you, but for new traders watching, it's a good thing to know. The reason why you do this, just so you're aware, this risk ratio is very, 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 very important in trading. You always want to risk, I would say, a maximum of 2%. You know, if you're taking more trades, like I'm quite selective, so I take probably between 5 and 15 trades a month, I allow myself to go up to 2%. Because, you know, if I'm only taking 2 trades a week, or yeah, I'm okay risking that amount. Whereas I'm taking a trade a day, you're putting, if I was using 2%, I would be, you know, basically placing 10%. Am I coming through okay? Sorry, yeah. Basically placing 10% a week. And I'm not really happy with that risk. You know, technically, if you're placing 1 trade a day, you could lose 10 trades in a row. And that you could be 20% down on your equity using 2%. So if you're trading more, reduce your risk. Where was I? So stop down here, 0.742. I go into my trade here. Stop loss 0.742. Now remember, this is not triggered yet. Just so everybody's aware. It'll only be triggered if it gets through to my buy stop area, 0.7.2. And then the next thing I do is I take 1-to-1 risk reward, which is 50 pips, right? Roughly around 50 pips from here. At this area, which is 0.75223. Take one of the trades. Take profit 0.7, what was it? Oh, I can't remember. 0.75223 and press modify. And this should be roughly around $2,000. There you go. So that's how I do my trades. Right, 1 TP is at 1-to-1 all the time, and then I trail the rest. CAD Swiss. So I'm in that. Let's hopefully it gets triggered, because I like that trade. You know, I like the context of the trade. I like the daily chart. I like buying the CAD. I know I've got a Swiss yen trade on, which I'll go into here. I know I've got this trade on, but I'm buying that against the yen. So with this Swiss yen, from yesterday, I've moved my stop up a little bit on account of this anchor or slight swing here. I mean, it's nothing major. I think I've banked about $340 on a $2,000 trade, so it's really nothing. But we're hoping that this just continues. And as it's not looking great, if we get another push here, again, that anchor, another anchor, I'll just continue moving that stop, because I'm just worried about a potential fall in the stock market. You know, we talk about NFP coming up tomorrow. Non-farm payrolls, which is the amount of jobs added to the US economy, minus the agricultural sector. So it's a big number. What I'm worried about tomorrow is if we do get a good number. I think they're predicting around 600,000. If we do get a good number, you'd initially think that would be good for the market. But what I think is those inflation fears on a good number might again creep into it. So maybe in the stock market, if we get a good number, you could see initial rise followed by a drop off without those inflation fears coming up. So, I think the best scenario for traders tomorrow, or certainly for me as a trader, would be an expectation number. So that's 600 grand. I hope they meet expectations. I think that, if it beats it by some way, let's say they add 1 million jobs, 800,000, that's probably a better example, 800,000 jobs rather than 600, I think you could see initial drop followed by a little bit of a snap back because those inflation fears might creep in again. But if we hit expectations, it might have a little bit of confidence into the market. It's not a massive number. And I think that might be the best scenario tomorrow. So we'll just have to wait and see. Anyway, I'll just keep moving my stop on Swiss yen. Now, USD ZAR is another one that I'm in. Not on this funded account, but on my actual account. That has been a bit of a monster. On account of this. And I'll show you this. This is my actual account. So there's, everybody's aware that I'm not bullshitting. Here's the actual trade on account of this head and shoulders. Took in that breakout, nice corrective before, which if I put my stop too tight, look at that, would have been stopped out. Move down, corrective, move my stop, push down, corrective, move my stop, and yesterday had a big day down. So again, I'm just looking for, this is where the 70% comes in, the patience. Because, you might be thinking, oh, look, I've captured a lot of profit here, I'm just going to take it. And then what might happen? This. So this is where the patience comes in. This is the 30%. This is the 70%, right? The discipline to let your winners run, which is difficult. I know it's difficult. Certainly if you've lost a few trades before, there might be that tendency to try and get it back, which doesn't always work. You've got to stick to your strategy and stick to your plan. The final one I'm in right now is this USD 30, which to be honest has been a bit of a bastard. It was a really nice setup. Again, V reversal, corrective, push through, steady state corrective, engulfer here on volume as my catalyst. Almost hit that TP1, very close to hitting TP1, and now we're getting back to this area. To be honest, I don't like this now. I can't take it out. I can't modify it. My bias is still indexes long. We've now got this 4-hour 200 in the way of our stop. We've got the 200 in the way of our stop. We've got this resistance area. So I'm not going to be worried about this until it breaks underneath this level, if indeed it does that. I do fancy this to come back here and let the market tell me what it wants to do at this area. So if it ends up being a losing trade, then it ends up being a losing trade. You're not going to win every single thing. So CAD Swiss in. The other ones I like. So I'm going to go through the ones that I like still. Pound Aussie. I'm still liking this from yesterday. It looks to be setting up quite nicely. I don't want to break above here. I want that ABC to continue on. Let that 20 period come through. Catalyst on high volume to go long. And again, if you take it out, we talked about accumulation. This possibly could be an accumulation period for institutions loading up on the pound to send it higher. The opposite effect is that distribution, institutions distributing positions or getting out positions to potentially take it lower. But Pound Aussie, I like still. We're just waiting for a proper retest and a catalyst. NZD-JPY, the Kiwi Yen, probably my favorite still. This is still setting up nicely, and I think tomorrow will tell us whether we're getting in or we're getting out. So tomorrow's candle, I don't think we get the catalyst today. I'll zoom in. I don't think we get the catalyst today, but tomorrow's candle, potentially something like this or this. I take that. It will come on high volume for sure tomorrow with NFP. So there will be more volume coming into the market. So that part of my checklist will be okay. And if we get that, perfect. You know, I take that all day. NZD JPY long, but it's not ready yet. It's not ready yet. Euro NZD was the one I was looking at in the morning as well, on this smaller time frame charts. Now here's a bit of, information for you. This, when it breaks through a level, right? It's not a retest here. This is not what I would consider a retest. Nothing I could take. However, if the highs have been broken, right, and you come down and let's say you have a different kind of retest you like, even if it comes down prior to the level and gives you a catalyst, let's say this ends up being an engulfer, that is technically a breakout retest. Like, your traditional breakout retests and the ones I prefer are when it breaks out and comes to the area, right? Not underneath the area. However, the highs have been broken. So this can be classed as, if it does kind of move up or gives us a catalyst on decent bit of volume, can be classed as a breakout retest. But again, this for me is not something I can take. I was looking at it on London Open here and it looked really nice. And it seems to be falling back a little bit. So I couldn't take that as a breakout retest. And it's, again, one that just kind of got to go. Markets have been horrible the last week. Hopefully, it gives us direction tomorrow. And next week could be a good week. I am selective, but I like being in trades. Because, I know I'm quite good at it. And I'll probably win more than I lose. But I don't like the times when you're sitting around. I'm just wanting a setup to occur, but I know that forcing my money somewhere is going to be the worst thing that I can do. Pound New Zealand. Again, I was watching this here, and it looked really nice. And Paul, there's if you're looking to trade breakouts, right, on the smaller time frames, this is great. Look at that. Rejection of that 20 on this hammer. Good push through. 1, 2, 3 bars. And look at simple 20, right? Simple 20 moving average. Look how it respects it. 20 periods moving up. Good strong break on a bit of volume there going through. And, instead of, if you're looking to take looking for the breakouts, instead of putting buy stops there, you could potentially look, and I haven't tested this, so I can't tell you whether categorically it works. I can tell you what I've seen through my experience. But if you see a candle like that, you could wait instead of, for example, instead of putting your order in here, your buy stop in here, you see this market come through, but you see it close like this, then maybe I'd be okay with you saying, right, I'll take a buy on that market, because waiting for that candle closure could be quite key, and it is quite important, because you could get a 30-minute candle, right? And within 15 minutes, it breaks through. The next 15 minutes, it rejects. So you end up with that hammer. So by waiting for the closures, you might not get in on that fake. So there, if you're looking at the smaller time frames, Paul, that could be something you go away and have a look at to see if it works or not. If it does, let me know, because I've done a lot of testing. I'm not going to go back for a few months and do. But if you find anything, let me know, because that's what I want to do. If people find stuff and learn stuff, then share it, and everybody can learn from it. Pound New Zealand, CAD Swiss we've done. Pound Swiss again, I do like. Talked about this for days, so I'm not going to go into it too much. But again, getting what I want to see. Need a reload before going long. That's next week's trade. I've covered that on my last couple of streams, so I'm not going to go into that too much. Aussie Swiss is another one that I was looking at yesterday, and I kind of want this to set up, because I like where it is in terms of a counter trend trade. I know this looks messy, right? This might look messy to a few people, but for me, I can make sense of that. In terms of this head and shoulders pattern, volatility contraction, it looked at this point that it might break through. Again, we've come back to a reload, a little bit of rejection here on volume. If this pushes through again, I would happily, again, take that long as a counter trend trade, because the risk reward of this, or the potential profit, is good enough for me to take it as counter trend. Coming up from this, big corrective. If you're getting in at the end of that corrective, then you could potentially be, heading for a good trade. But it is risky. Sorry, that's a bad word to say. It's not risky because I've tested counter trend moves, and the ones that work, right, that work really well, make it worth it to take these trades. You might get 1-to-1, you might lose a few, but those ones that go, you can get your 7 to 8-to-1s, which gives you that little edge in doing it, because 7 to 8-to-1 for me is a 10% plus trade, which is certainly feasible with these counter trends. So Aussie Swiss, I need another push up and reload there. It's looking nice on the hourly, rejecting off that 200, and that's what I need. Potentially I'm okay with this if it pushes up and then accumulates a few bars. I just want that 20 coming through. Again, just forcing it into that level for potentially a big breakup. So Aussie Swiss I like. And finally, USD Cad, which I would be wary of trading the US dollar tomorrow before the news, by the way, because you will get some volatility. And if you're in a short-term position, 20-30 pips, certainly for NFP, you can get volatility that might take you out before it goes in the intended direction. And I don't really, tomorrow is an NFP that is quite hard to really predict. It could go either way. It depends how the market wants to see it. It depends if they consider a healthy NFP, one that beats expectations as good for the market and kind of dwindles away those inflation fears. I just can't see that. I think the best, and again, this is just my personal opinion, I think the best thing is that we just match expectations on NFP numbers to quell those inflation fears. I'm looking at this USD CAD on this cup with handle. Again, we're getting this slight reload. One that is probably a Monday trade, so we want this to come back down. And same thing, just the same thing. Do the same thing day in, day out. Let that 20 come and take that breakout short. We are certainly going with the trend on this one. This is corrected through time rather than through price. And what I mean by that is, so a correction through price is a standard pullback. A correction through time is, your ranging action. And letting that, look at that, simple 20. Look again. Simple 20, simple 20, simple 20. Simple is always better in my opinion. And it's at the point now where I consider this move digested just by using that moving average. And just, also by looking at it, we've got quite a few days or a week or two of ranging price action. Potentially ready for another leg down. So let's see what the USD CAD does and for a potential break lower. I'm not, my account's been sitting around this area for a long time now. I need to put that trade on this account. I put it on my actual account. But yeah, I've just been sitting around this area doing nothing really for quite some time. Sorry, this is the wrong one. This one here. Yeah. Sitting around this area for quite some time, and that's your market. That's what it is. It's always a bit boring going from like $1,000 in profit to $3,000 in profit, back to 2,000 down to 1,000, potentially going up. I don't mind if things hit stop loss. I just like direction. You like to see markets moving, and if you don't, sometimes it gets a bit frustrating, but that's trading. Anyway, thanks everybody for joining. I appreciate it, and I'll see you all tomorrow. I think I might, what I'm going to do tomorrow is I'm going to do an NFP show, right? So instead of this time, I'm going to do it at 4:30, and we can see those numbers kind of come in and see how the markets react. So 4:30 tomorrow. Thanks everyone. Cheers, Paul. Good to see you again. Hopefully your trading is going well, and I'll see some of you tomorrow. Take care.